Alright y'all, this is Cole with the Brantford Exchange. Today I'm going to be going over 3 mistakes that beginners make. We just made 3 golden rules to follow in the stock market. I hope that was helpful for you guys. So right now up on the screen I have the 3 mistakes that you make, and I have our Discord chat. If you're not in our Discord chat, be sure to get in there because this is where we have all of our stock talk. This is where we have all of our call outs, our technical analysis, and this is where you have a community of helpful and experienced traders to help you along and help you to become a profitable trader, which is obviously the goal. So at any rate, though, we are going to get into the 3 mistakes. So number 1, not executing stop losses. We just made the video that is 3 golden rules to follow, and in that video we had make sure that you have a plan and you're sticking to that plan. So within that plan, we told you that you need to have an entry point in mind before you get into the stock. You need to have your entry point in mind, your exit point in mind, and your stop loss in mind. So if you get into a position and it starts to go south and it doesn't go your way and you start losing money on the position, you need to have a price point in mind. Say you got into a stock at $10, you need to have a price point in mind so that if you start losing money on the trade, where are you going to cut losses? When are you going to sell so that you're not just losing money indefinitely? So say, if I got into a stock at $10, I might want to set a stop loss at $9.85 or something like that. On Robinhood, it's really easy to do. You can just go on there, and after you're into the position, you can set yourself a stop loss. You can set it for, say, you bought in, say your average is $10, you can make your stop loss at $9.85 and set it up to sell the amount of shares that you want it to sell off. And it's really helpful because you don't want to get stuck bag holding. The problem with bag holding is not only that you're losing money on the position that you're stuck in and losing money on, but you're also missing out on the money that you would be making from being in other positions, but you can't get into other positions and you can't take other positions and buy more stock because your capital is wrapped up in a losing investment, and you don't want that to happen, which is why it's important to cut those losses short, to have the discipline to cut those losses short, because trading, not an emotional game. What happens with a lot of beginners is that they think that they're right and they don't want to believe that they're wrong. It's like, well, and you get into this mentality of, well, I'm going to make my money back. It's no big deal. I'm only down 5%. I'm going to make it back. I'm not worried about it. And then, next week you're down 10%. And then you're like, well, now I'm down 10%. I'm definitely not selling. I'm just going to wait it out until I make my money back. And, keeps going and keeps going. And again, the problem with that is not only, 1, that you're losing money, but 2, it's the capital that's wrapped up in a losing investment that you're not, that you can't use elsewhere, and you can't make other investments with that capital because it's wrapped up in a losing investment. That's why it's good, it's so important and vital to not get emotional about it. If you were wrong, you were wrong. If you bought into a stock, you obviously, if you went long on a stock and you bought into a stock, you obviously think that the price is going to go up. If the price didn't go up, then it didn't go up. You were wrong. It happens. You're not going to be right on 100% of the trades. So when you are wrong, you need to have the discipline, and you need to just, have the awareness to just understand you were wrong and just take the small loss in the position and move on and move on to your next trade, and your next trade is going to be better. So you can't get caught up on the trades that you're losing on. If you end up losing on a trade, you want to cut the loss short and be done with it, because you don't want to wait around to try and make your money back. It's not going to happen, and you're going to end up losing money like that, and you're going to end up missing out on other great investment opportunities if that's what you're doing. Number 2, not using limit orders. This one's also so important. On Robinhood especially, during trading hours, prices are fluctuating. Market prices are fluctuating like this. It's second to second. Prices are always updating. So if you're getting into an uptrending stock, then the price is constantly going up. If you go and try and set yourself a market order for say the stock is trading at $10, and you set yourself and when you go in there to place a market order, the stock is trading at $10. By the time you set in the amount of, when you're on Robinhood, the time you set in, okay, yeah, I want to buy 150 shares, and you swipe up on your phone. By the time you do that, that price could already be at 10.15 or it could already be at 10.20. And then after that happens, after that little pop-up happens, and then it gives you an average that you didn't want. And it happens. It really does happen on Robinhood. It'll say market value, and it'll say $10, and then you swipe up, say purchase, and then by the time that you're done and you go look at your position, your average is a completely different price. It'll be like 10.15 or 10.20, something like that. And then you'll be down on the position because the price is pulled back down, and that's not what you want to happen. Well, that's where limit orders come in as compared to a market order. That first one was the market order. That fills you at whatever the current market price is. That's not what you want. You want to use a limit order. A limit order lets you specify the exact price point that you want to get in at. So if it's not at, say you set it at $10, you set your limit order at $10 for 150 shares, it's not going to fill your order at anything over $10. It's not, most likely it'll just fill you in right at $10, but if something happens where, the stock is only only available for $9.98. It'll give it to you for the lower price too, but it's not going to give it to you for a higher price, which is over $10. So you want to make sure that you're using limit orders to actually get the average that you want on the stock. That way you're not losing money right off the bat on the position, and you know you're getting in at a good price point. So number 3, this one's important too, and this one is especially beginners always make this mistake. Do not chase stocks that already took off. If a stock has already appreciated, 5-10% that day, it's probably a better idea to just wait for a pullback on that stock rather than trying to chase a stock. Or another one is IPOs. I mean, I see a lot of new investors get wrapped up in IPOs, especially right now. The popular thing is these is the cannabis stocks, the pot stocks, and the IPOs that come along with that. Like for example, Tilray a couple months back, TLRY is the ticker. It was, it shot up like 126%, something like that, 200, some crazy number. And basically it's just a sucker's rally. I mean, at that point, it's obviously manipulated. The company is not worth what it was being valued at. I mean, its shares were like, it was like $100 and some when its IPO started. It was like a double-digit number, somewhere down like $20, something like that. And so it's basically a sucker's rally. You don't want to get into a stock that's already pumped 200% this month, which is what happened with Tilray back then. If the stock is already up 200% that month, then don't chase it. It's not going to go up another 200%. The idea, and the game of stocks and being in the stock market, the idea is that you want to get in before that happens. You want to, look at technicals, like down here, how Harry here is looking at technicals on his chart, and you draw trend lines. You can look at the EMA, the SMA, all the indicators, all the things that we teach you how to use on this channel, and the people in our Discord, like Harry, like Mr. Darkside, everybody that's in there. Shout out to all you guys. You guys are doing a great job. Really, and Snoopy Hippie too. Shout out to him because he's in the profit section on the chat. He's just a madman with the options. He makes great returns. So shout out to all you guys. But you don't want to be chasing stocks if you're new to the game. You don't want to be chasing a stock that's already taken off. You want to make sure that you're getting in before it pops off, before it reverses, because if you're getting in after it takes off, then you're getting in closer to a resistance rather than closer to a support, which is not what you want to do. You want to be getting in when it's a good deal, when the stock is cheap. You want to buy low, sell high, which is obviously always the golden rule. So that's that. But those are my 3 mistakes that I see beginners make the most. Again, you're not executing stop losses. You need to have the discipline to cut your losses short. Not using limit orders. You want to make sure to use a limit order because the market order will absolutely screw you. It screwed me. It screwed Jordan. It screwed a bunch of people I know. You don't want to use market orders, especially on Robinhood, and chasing stocks that already took off. Obviously, that last one's pretty obvious. You don't want to chase a stock that's already taken off. And also, on the flip side of not chasing a stock that's taking off, you also don't want to catch a falling knife. If a stock is falling and it's nowhere near support, and it's nowhere near support, it doesn't look like it's getting ready to reverse soon, you don't have any confirmation of a reversal, you don't want to buy into the stock just because it's cheaper than it was a couple days ago. It's not necessarily near a bottom or near support just because it's cheaper than it was yesterday or a couple days ago. You could be catching a falling knife, and you don't want to catch a falling knife because you're obviously going to slice your hand, so don't do that either. Make sure you're getting in close to a support, close to a reversal. We teach you how to identify those things, how to identify those trends and find those reversals before they happen on this channel. So be sure to check out the rest of our videos. If you guys have any questions, just leave them down in the comments below. Again, if you're not in that Discord, get in the Discord because that's where all the good conversation happens. That's where we give our call outs and our suggestions, tips and tricks, everything that's not featured on this YouTube channel. But other than that, we're going to be coming to you guys real soon with a video, actually Monday. Today's Saturday that I'm recording this. On Monday, we're heading to Philadelphia just to, film like a little day in the life video, I guess. Just to go, spend the day in Philadelphia. So at any rate, that's going to be it for right now. We'll see you guys in the next video. Again, if you have any questions, just leave them in the comments below. You guys know what to do, and we'll see you in the next one.